Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com. Just a quick video for you here. Day before the election, I don't have much to say because I'm not really sure there's going to be much movement in much of anything, and that's a lot of muches. So a few things here. Let's get rid of this and put it somewhere else. Pinduoduo. This stock has been consolidating. It's been in a base for months, for almost 4 months here. And so it's ready. It's ready to break out. It's ready to move higher. Earnings are in a few weeks, right? Okay, 2.5 weeks they are. So I want to be watching and see what this stock does as earnings approach. I wouldn't buy this stock now. It's not doing anything. It's just sitting here farting around. However, if the stock breaks out above here, which is last Thursday's high, 97.25, if it breaks out above there, that's a good development. That's a real nice development. Here, however, is the problem with that. So it breaks out above this level, then it's bumping right up against $100, which is an even number, and it sounds weird, but that's when people like to sell. They like to sell even numbers as the stock comes up. You see the same thing like at $50, but particularly something like $100. And so even if the stock breaks out here, you don't have, you don't have a lot of headroom before it runs up into the next level of resistance. So it's kind of a hard stock to trade because right now it's at 91.50, right? So if you're buying it here and it's working out for you, it's got 5% before the first level of resistance, and then a total of 9.5%, 9.6% before it gets to the next level of resistance. Meanwhile, on the downside, it can come down to the 50-day moving average before you could really expect it to find support, and that's almost 9%. So it's actually a lot of risk on the downside for not a lot of risk on the upside, or for not a lot of reward on the upside. That's why I would suggest waiting for this. Watch this stock, set an alert like at 997 so you can watch it. So you can have it back on your radar, and then set another alert at, say, 99 or 99.50. Why there? Because I'm not telling you to buy it. I'm telling you that you want to watch it. You have to see how it's trading because timing is everything in this game. And so if the stock does break out and then it runs up to 110 and then you see it, well, that's kind of lame, isn't it? And so you want to be able, you don't want the stock to dominate your time. You don't need to sit there and look at the darn thing all day long. Set your alerts, and that's very much the same as having a trading assistant. You tell your trading assistant, hey, if the stock goes up to such and such, let me know. Other than that, well, why don't you go get me some coffee? And then, oh, by the way, if the stock comes up to here, definitely let me know because I might want to buy it. Thanks for the coffee. Okay, that's what you got a trading assistant for. Only problem is it doesn't get you coffee if you set it on your software, but the assistant doesn't miss it because it was out smoking a cigarette or taking a bathroom break. So anyway, I think I've pretty much worn out that analogy. The point is, if you wait for this stock to trade above 100, I think you've got a lot more potential for the risk than if you're buying it now or even buying it up here, anticipating a break above 100. I wouldn't do that. All right. So anyway, that's all I got to say, and I'll talk to you next time.